The Employees Provident Fund has confirmed that it purchased a logistics centre in Shirebrook, the UK for £120 million or $637.24 million ringgit cash. The facility is currently occupied by British sportswear retailer Sports Direct International. In its statement, the EPF said the deal will complement and form part of its UK real property portfolio. It is understood that the buyer is Quasar Logic Sportivo, a subsidiary of the EPF. Meanwhile, Sports Direct, which is owned by billionaire Mike Ashley, will take a 15-year lease on the asset, with the proceeds to be used for its operations and increase working capital. Tenaga Nasional saw a 26% drop in its first quarter FY19 net profit to 1.56 billion ringgit from 2.12 billion ringgit a year earlier, no thanks to higher net loss on impairment of financial instruments and tax expense. Revenue, however, improved from 12.27 billion ringgit to 13.24 billion ringgit, it said in its BOS filing. Tenaga explained the better top line is a result of the increase in the group's sales of electricity of 7.8% or 943.3 million ringgit from 12.07 billion ringgit to 13 billion ringgit. Looking ahead, Tenaga said for FY19, its performance is expected to remain stable based on Malaysia's 2019 first quarter economic growth and the overall outlook for the year. Petronas Gas first quarter of FY19 net profit grew 6.7% to 515.46 million ringgit from 483.22 million ringgit a year ago, thanks to unrealized foreign exchange gain and higher share profit from a JV company. The group explained in its BOS filing that the unrealized foreign exchange gain of 52.5 million ringgit was due to the discontinuance of hedge accounting on US dollar lease liabilities for floating storage units at its liquefied natural gas regasification terminal in Sungai Udang. Meanwhile, the higher share of profit follows the completion of the group's air separation unit project in Pengerang during the quarter under review. As for revenue, Petgas said it saw marginal improvement at 1.37 billion ringgit compared with 1.35 billion ringgit in the first quarter of FY18. A first interim dividend of 60 cents per share was also declared and will be paid out on June 27th. Moving forward, Petgas said the Energy Commission has given its nod for the tariffs for the gas transportation and regasification services for a pilot regulatory period in 2019. It added that while it expects the tariffs to affect its transportation and regasification business segments' revenues this year, both sectors would continue contributing positively to earnings. AMB Holdings, part of the AMB Group, saw its fourth quarter of FY19 net profit surge 81% year-on-year to 459.67 million ringgit from 253.41 million ringgit as a result of a substantial net write-back for impairment for loans, advances and financing totaling 271.56 million ringgit during the quarter. In a filing to Bursa Malaysia, AMB said revenue increased by 5.5% to 2.33 billion ringgit from 2.21 billion ringgit a year ago. It proposed a dividend of 15 cents per share. In a statement, Group CEO Datuk Sulaiman Muhammad Tahir attributed the improvement to higher lending volume, lower expenses from non-repeat of severance costs and increase in recoveries. Meanwhile, interest income grew 10.7% year-on-year to 1.24 billion ringgit for the fourth quarter of FY19 from 1.12 billion ringgit. As for FY19, AMB's net profit was 33% higher at 1.51 billion ringgit compared with 1.13 billion ringgit in FY18 on the back of a 6.3% increase in revenue to 9.12 billion ringgit. Interest income grew 13.2% year-on-year to 4.89 billion ringgit. Moving forward, AMB said it will continue driving income growth momentum in line with its key segments and product strategies, especially in the areas of transaction banking, foreign exchange, SME, and wealth management. It added that its other financial priorities in FY20 will be centered around capital accretive growth. The independent auditors of Konsortium Transnasional have expressed their doubt over the group's going concern ability amid high liabilities. It was noted in a filing with the boards that the public bus operator's current liabilities exceeded its current assets. The auditors, Messrs. Al-Jafri Salehin Kuzami PLT, said groups and companies' current liabilities, as indicated in the financial statements for FY18, surpassed current assets by 63.07 million ringgit and 14.1 million ringgit respectively. The auditors said the group's ability to continue as going concern depends on whether it is able to gain support from its penultimate holding company, creditors, lenders, and the Land Public Transport Agency, and whether the company can generate adequate positive cash flows and future profits from its ongoing reorganization.